Hello and welcome to the Mortgage Ready webinar series where we are doing our down payment assistance deep dive. Now, this is going to be a great introduction to the Washington State Housing Finance Commission loan programs that are most popular, so you can be armed with the right information to decide, hey, is this a good option for me? Like, is this something that we have access to? Do we qualify? What are some of the things I should know before you jump in? Because here's the thing, the Housing Commission does have a required course, and time out, this isn't it, but that course is a long drawn out course, and so before you're like, hey, should we commit to this? Is this something we should be exploring? I want to walk you through some of the key highlights of this program and some of the things that I love most about it. So let's just dive in. As a bonus, if you have any questions, just leave it in the comment section below and I'll reply to them as soon as I can get to that. So definitely don't hesitate. But hey, I'm RJ. I'm your local mortgage guide. I am a husband. I'm a dad. I'm a pretend farmer. Lots of different things I got going on. We got 3 horses, 8 chickens with an asterisk because that number is always changing for my chicken people out there. Cat and a dog. I went to Western Washington University here in the Pacific Northwest. I've been calling this area home in Whatcom County, kind of the very topmost part of the state here since about 2008. I've been in lending since 2017. I've been working with the Housing Commission since about early in 2018, maybe later in 2017. So I'm an approved lender directly with them. I'm a manager. I'm a loan officer here at Canopy Mortgage. I run this little outfit that we've got here. I'm passionate about client empowerment and education. And in my free time, if I do happen to have any, we got music and snow sports, and my NMLS number is 1587912. I do have a license in good standing, and there you go. I fell victim to the ChatGPT trend, so there you go. There's me as a caricature. Let's dive in. Let's talk about kind of what we're going to talk about today and what you can expect to learn from this. And it's going to be a little bit longer, maybe a little bit more in depth, but it's going to be worth it to stick around to the end, I promise, okay? We're going to talk about how these programs work, okay? What are some of the highlights of these programs? What are the requirements? Simple pros and cons, how you write a strong offer, maybe leveraging down payment assistance that might not look as good on paper, and also a step-by-step guide to how this works. And then if you've got questions, definitely throw those in the comment section below. So this is part of a mortgage ready webinar. And what does it mean to be mortgage ready? It means that you're prepared, you've done the research, and you're not feeling rushed. And honestly, in this market, buyers who are prepared, who are ready and flexible will win. Okay, we're in a little bit of a turbulent market. Things have changed pretty quick, and the ones who are mortgage ready will win. So this, understanding how down payment assistance can be a great tool for you so that you can be ready sooner than you may think, is going to help you win in this market. Okay, here's how you get mortgage ready. Have conversations early and often. Avoid major job changes, right? Stay true to the course. Save when you can. Stay flexible with your current housing. If you can go month to month, that's great. If you can live with family, that's great. And then also take this time to master your credit. Okay, you got to know what's happening and why. All right, let's jump right in. So the Washington State Housing Finance Commission is the commission here in the state of Washington that offers these programs. They're going to be called the WSHFC for short. It's a long name. It's crazy. And then they have a website as well, WSHFC.org. If you want to learn more, I definitely recommend checking that out. They were established in 1983. They want to make housing affordable. They kind of work first-time homebuyers, low to moderate income households, underserved communities. So here's what they do. They do not lend the money. They put these programs together. They administer them, and then they work with approved lenders like myself to basically facilitate these loans for borrowers. We work directly with you. They end up going there, and they're sponsored by the Housing Commission, but they don't actually do the lending. So you get the opportunity to work with somebody like myself who's got experience and is approved to handle these loans. Okay, let's talk about some highlights. There's nothing really super tricky about these loans. They pair with a standard, loan you're going to hear about, whether you know these terms or not. It doesn't really matter, but conventional and then all the government alphabet soup here, FHA, USDA, VA. Okay, it's going to pair with those programs to help overcome some of the challenges, which often is the large portion of down payment required. A lot of these loans are in the 3 to 3.5%. USDA and VA are true zero down loans, but they're still closing costs. And so you're able to leverage the commission's assistance to get you over that hump of needing more funds than you think, right, to close. So in general, it's a 3 to 5% assistance. Now, it's not a grant, but there's also specialty programs that have fixed amounts from $15K all the way up to $150K. The crazy part is there are 46 program options, so it definitely works and helps to work with somebody that understands these programs, and we kind of get you into the right program. So we're not going to dive into all 46. I just want to talk about some of the highlights and some of my favorite programs there. So they are second liens. They're not grants. Okay, so it's not free money. A grant is going to mean free money. It's 0% interest on that lien. Some of the specialty programs are going to have a 1%. So basically that means, hey, if they give you the 4% that you need for the program, it's going to be zero interest loan that's going to sit with the property. It's important to know that you do have to sell, that you do have to pay it back when you sell, refinance, or if you move out. They don't want to use this as a program to help you leverage like building an investment portfolio. So if you did want to keep a home, say, and buy another one, you just need to refinance and pay it off at that point. They do have some specific requirements, so let's talk about those. One, you do have to work with a commission-approved loan officer and approved mortgage company, which I am. I work for Canopy Mortgage. We're on the approved lender list, and I've taken the certification courses for this program as well. It's for purchasing a primary residence in the state of Washington. Okay, you do have to qualify for the first mortgage. So each loan that we talked about, conventional FHA, USDA, VA, you have to qualify for that program. They don't layer in additional qualifications. They just want you to say, hey, if you qualify for that program, we're going to piggyback with you and give you a second mortgage to help come up with the down payment. They do want you to attend the commission-sponsored course, okay? And you're going to get a certificate for that. Again, not this class. They have a list on their website. I'll give you that list in a little bit. And then they do have credit minimums, okay? These are going to be program minimums for these more popular loans. And so just understand 580 for FHA, 620 for conventional. And then they also want you to have a home inspection, okay? Behind my head here is the home inspection. So important things to know. What kind of homes are eligible? This is really important, right? So stick-built homes, that's going to be just your traditional home. But manufactured homes are also eligible. They do have to be on land, okay, 1976 or newer, right, permanently on the property. They can't be mobile and never have moved, right, other than to the property. So there's a few specifics there, but understand if it's in a mobile home park, if it has a unit number, probably not eligible. But if it's on a piece of property, it's what's called taxed as real property, and it's old enough, it's probably going to qualify, which is great. You can also use this program with condos, with townhomes, and honestly, the program has specific guidelines for each property. And so as long as the home meets those appraisal guidelines, you'll be good to go. Okay, let's talk about real simple pros versus cons, right? You can simplify it this way. Is it right for you? Here's some of the pros, right? It's going to make buying a home sooner. It's going to bring up that you don't have to sit and wait and rent and save and save and save, which is hard to do, right? So they're going to help you with the big chunk. There's no payment on that second loan. Sure, it's not free money, but they're not charging you interest. There's no payment, so it's not making it harder to qualify. There's specialty programs for different situations, different income limits throughout the state, different areas. And the best part is it's a standard loan process. They don't complicate the process at all. It's going to be as simple as applying for a standard loan. We're just going to tack this on as assistance for you if you need it. All right, let's talk about the cons. The rates and fees can be higher. And this is a complicated conversation, but just understand if you have a lower credit score, typically your rate's going to be higher. For this program, whether you have a 605 credit score or a 795 credit score, your rate will be the same for each respective program, okay? So if you have a lower credit score, you might actually benefit from using the program because you're not going to get penalized as you would with standard loan programs. And the commission sets their own rates. If you're curious what the rates are, they have it listed. It says today's rates right on their website, so you can check that out as well. If you're thinking about, I'm going to shop around different lenders, there's no shopping for this. We just offer what the Housing Commission offers. What you need to shop for is somebody who's knowledgeable about the program and has access to it as an approved lender. Because not all lenders are approved, and even some brokers, mortgage brokers, can't help you with this program. So independent mortgage bankers like myself, we can. Okay, cons. Borrowing more can make refinancing tricky. So if you buy now and rates are higher, or wherever rates are, you want to refinance in the future, you're going to owe 100% of the property, or sometimes more. And so you can't quite refinance until the home is appreciated in value. So when you have more of a loan, even though there's no payment on that loan, it can make refinancing harder. So it's important to understand, okay? Don't buy with this program and say, we're going to refinance within 6 months. It might be more like 2 to 3 years, okay? In realistic expectation there. There are income limits that can be tricky to work around. Some of the specialized programs are really tight. And there's also what we call acquisition limits, or we think of it as like a price limit. You can't buy more than a specific home, and it's all based on county. It's all based on household size. We'll talk about that a little bit more later. And then to understand, right, you got to pay it back. It's not free money. There are grants that are available out there, or there's forgivable second mortgages. I will say, as someone who has access to all of them, this is still a better program in terms of the structure of the first mortgage, which is, hey, the main loan typically has still a better rate and fee schedule than some of these programs are going to have a forgivable second mortgage. Because think, right, or they're going to forgive it, but really you're making up for it, right, in interest. So think of it that way. Okay, let's move right along. How to write a strong offer. Here's really one great tip that I love to give, because some people are going to say, oh, it's zero down, or we're going to, sellers aren't going to think our offers as strong as it can be. So here's how we overcome some of that, okay? One, get your pre-approval underwritten. This is a process that we offer that says, hey, we've got a full loan application. Again, going back to being mortgage ready. We've got everything organized. We're having conversations early. We're getting our pre-approval underwritten. We're not just entering our information somewhere in the internet or Rocket Mortgage or something like that. Hey, we're actually moving into the next step, because those are pre-qualifications, right? I have one of those as well. Your pre-approval is credit application, credit report, and documentation. We are reviewing all of it to make sure that it all lines up, so that when you get into the process of buying a home, when your loan is going to get looked at and has to go through the approval process, that there aren't any question marks. We want to address all those up front, and actually we want to have somebody who's going to give you the approval do that up front. So that's your underwritten pre-approval. That's going to be the strongest offer you can write. One other thing would be, don't ask for seller credit. So this is where we're going to need to save enough for closing costs, okay? Zero down doesn't mean $0. I'm going to say that again. Zero down doesn't mean $0. Okay, you're going to have closing costs. That can be anywhere from 2 to 4% of your purchase price. Kind of just depends on the program and the area that you're buying in. Okay, so you're going to need closing costs. But here's the thing. You're not going to need closing costs and a down payment. So again, we're going to move that purchase forward with the down payment assistance, but also understand that that can be there. So if you want to have a stronger offer, don't ask for seller credit. Now, if you're the only person, there's no offers, the house has sat for a while, 100% ask for closing costs. We want to keep that money in the bank, especially if you're going to be buying a home. Keep money in reserves. Okay. All right. Let's talk about inspections. You're going to need an inspection for the Housing Commission. Sometimes people will what's called waive the inspection, meaning like, hey, seller, we're not going to have an inspection. We're not going to negotiate on that. So what you can do instead, we still need the inspection. So have the inspection, but have it be pass fail. So instead of like, hey, seller, I'm going to get this inspection. I'm going to ask a bunch of stuff from you. Just say, hey, no, it's going to be pass fail. I got to have one. We want to know what we're getting into. And if it looks ugly, hey, fail, we're just going to say we don't like the inspection, fail. We walk away. No harm, no foul, right? And then here's another thing. Be prepared to close early. And as a bonus, with an underwritten pre-approval, we can do that because the Housing Commission doesn't complicate the loan process. There's maybe 1 or 2 extra days at the end, not 30 or 45 days, so you can close quickly with a Housing Commission loan. Again, you can close quickly, which is going to matter to the seller because what? Sellers want their money quickly. They want the fastest path to their cash, and they want it to be smooth. So the fact that you've already been underwritten, pass-fail inspection, you're not going to nickel and dime them, and you can close quickly, that is going to be an offer that a seller is going to be excited about. Okay? Let's move right along. Let's talk about your process. This is great. This is kind of a big overview of like understanding what the process looks like to leverage down payment assistance. Okay. You're going to start with a consultation. That would be with me. If you want to book that, do that. Leave a comment below. Message me, call me, email me. I'm really easy to get a hold of. We got to kind of figure out where you're at. You don't need to jump right into the pre-approval because maybe you're not quite ready, and that's okay. But you need to understand if you are ready, your next step is a pre-approval. I would say the pit stop there is going to be your underwritten pre-approval like we just talked about. Then once you're pre-approved, you can go and get your class certificate. You could do that at any point in time. But again, it's important to know that, hey, this is the right path for us. We're going to, have a chance at buying a home within the next 2 years. The certificate does expire. Okay. So we're going to go get that certificate. From there, you get to go home shopping. That's the fun part. Work with your licensed real estate agent or somebody that we can connect you with and our trusted team of partners. Write those offers, get an offer accepted. The next thing we're going to need to do is have an earnest money deposit and an inspection. And earnest money deposit is just a deposit you place up front that just says, hey, Mr. or Mrs. Seller, I'm serious about buying your home. Okay. From inspection, out of earnest money, you go into underwriting, you get your approvals. There's a lot that happens in the process, including appraisals, some stuff happening behind the scenes, and then you get closing and keys. But that is it simplified for you. All right. let's talk about the most popular programs. This is my favorite part. The most popular program here in the state is probably Home Advantage, although House-Key is a great option as well. And then the true zero-down programs, like we talked about, both VA and USDA. So as I mentioned before, the Housing Commission works with kind of our standard loan programs out there. So that's going to be your FHA and your conventional, going to be like the most popular low down options. And the Housing Commission is going to come in with a 3 to 5% assistance to kind of help get the funds that you need to really make this happen. So look at it, FHA, 3.5% down, 580 minimum credit score. There's no income limit, which is great. It does have a funding fee, and it has what's called stricter property requirements. Sorry, I'm kind of blocking everything here for you. Stricter property requirements. Okay, that's one thing to know about FHA. You know, if the property's not in great shape, probably not going to fit FHA, but FHA is going to be great for lower credit scores as well. Conventional is going to be ideally if you're 700 plus in your credit score. There's lots of programs that you can do if you're a first-time home buyer. It's fixer-upper friendly. There's no funding fee, and it's a 3% down payment requirement. Pretty flexible, checks lots of boxes, allows you to do a lot of different stuff, but it's not a good fit for everybody. Now, the House-Key opportunity is going to pair with that FHA loan. This is going to be through the Washington State Housing Finance Commission. It has great rates, so they're typically a lot lower than the other program rates. The other program in general is going to be the Advantage program. But in this program, you can get up to $15,000 in assistance at 1%. That 1% is going to be due at the time you sell. So if you borrow $15,000, you're going to owe $16,500. It's pretty simple. Okay, $1,500. So it will cost you at any point that you go to pay it off. It's a minimum 580 credit score. You must be a first-time home buyer for this program to work, and you do have to take the Washington State Housing Finance Commission class as well. Okay, here's the tricky part. Right, here's where it gets a little tricky for this program. There's going to be household income limits. Okay, that household income limit is going to depend on what county you live in and what size of household you have. You can see here, King, Snohomish, 1 to 2 persons, it's 88. Snohomish, with King and Snohomish, if you go up to 3, it's 110. Clark, Kitsap, Pierce, Skamania, Thurston, and Whatcom are 75 to 94. And all other counties are 60, call it 64 and 79. These are always changing. They're different based on the counties that you're going to be living in. And then there's also acquisition limits as well, like we talked about. So price limits, those can also be tricky. The best thing to understand about this program is that work with somebody who can look at all the different programs and see if it's a fit for you. Might not be a fit. I try and fit everybody into this program, and if they don't, we move on to Home Advantage. So Home Advantage, slightly higher rate, although it fluctuates a little bit, is going to have a way higher income limit of $180,000, and that's going to be the people who are on the loan. Say if you have a household income of $200,000, and maybe one person makes $140,000, one person makes $60,000. The person that makes $60,000 can come off. The person with $140,000 is on the loan. You both own the property, and you fit. So there's some creative ways that we can leverage this as well. There's a ton of flexibility here at 3, 4, or 5%, depending on how much you need. It's a 0% interest rate on that. And so while you're capped at $15,000 with House-Key, if you buy a home at $500,000 or more, you're right, you can get up to the 3% or 4% or 5% of your loan amount in assistance. And so that number can actually go higher. So you're going to have access to more funds. The income limit's higher. The trade-off here is that the interest rate is going to be a little bit higher, okay? You don't also have to be a first-time home buyer, which is a bonus, and a lot of people don't realize that. They've opened it up to as many people as they can, and also you obviously do have to take their class as well for this one. So I love Home Advantage for this reason, but on the occasion that you do fit into House-Key opportunity, it's a great program to get into when it works. Otherwise, Home Advantage is a win almost all the time. Now, when it comes to specialty programs, I'm going to move my face out of this way, there are a ton. These programs are subject to funding availability. Sometimes they come, sometimes they go. They are all over the place. And so here's just the important thing to understand. You've got a ton of options, and we'll find the best option for you. I don't think you need to really get into the weeds and figure out like which one's going to work best for you, but a couple I'll highlight. Covenant Loan Program is going to have, the Covenant is a newer program. It offers the most amount in assistance. It's for people who have family members or relatives that have been here since 1968, and it's for disadvantaged communities as well. Okay, so Covenant is important for that. It's maybe a little questionable if it will continue. They're trying to make sure it continues. Home Choice is great if you've got an adult living in the household or a child with a disability. Home Choice can be a great option for you too. There's some other ones for veterans and Energy Spark if you're buying a new home with upgraded energy efficiency in the home. You can get a little bit discount on the rate as well. They're nuanced. They're kind of confusing, but a good commission-trained loan officer will know all of them like myself and will get you into the right one. The thing to know, there's a ton of options. So ask, hey, what program would be right for me? Some of the other programs out there that are good to know that everybody's going to ask about are VA. Obviously, you have to have this military service requirement, but no down payment, no funding fee, no mortgage insurance, no funding fee, if you have a disability, VA disability. There are stricter property requirements with VA as well. And VA, you can leverage with the Housing Commission to get help maybe with your closing costs. So if you needed to go zero down VA, but didn't have the money for closing costs, seller wouldn't cover it, you can use the Housing Commission to come up with some closing costs for you. So that's also great to know. USDA is kind of in the same boat, okay? Zero down. It's got to be rural, but it's a really great loan program when it fits. Does have a funding fee, and they both have stricter property requirements, but when they fit, they work really great. USDA is going to have some income limits. It's going to be a little bit more strict on what you can spend and your credit score, but these are great programs. When they fit, they fit. But otherwise, falling back onto the Housing Commission programs is a great way to start. That is it. That's all I got for you. That was a crash course deep dive into these programs. I think the key takeaway here is that you have options when it comes to finding opportunities to come up with cash to make it work. And in fact, don't let the fact that you don't maybe have enough saved keep you from buying a home, because often waiting is going to mean watching home prices continue to appreciate around you. I've got a ton of great resources for you. If you need my contact information, it's here. You can follow me on social media. I highly recommend you do that if you're not already. I'm always trying to put out educational, helpful content for home buyers and realtors alike. And I also have some credit resources here. I have an affordability calculator, and then you can also book a one-on-one right there for you. I'm going to move out of the way so you can get a clean shot. So screenshot this if you want. Use these resources, and if you have any questions, go ahead and leave them below. Looking forward to speaking with you, and congrats on your journey to buying a home. Can't wait to see where you go with it.